Hey guys, my name is Max. Thank you for being here. Happy afternoon. Boy, not a great day in the market. Jackson's back. Jackson, you were being so good this morning. I was hoping that trend was gonna continue. Okay, okay, Jackson. No, Jackson, you have food. Go get your food, buddy. Okay. All right, guys. Let's take a look at this old market here. Thank you for being here. We have Charles, talented option trader with a lot of good ideas. Charles, you're saying another day of hard selling going to scare people. Triple Q 600 coming right up. Yeah, let's look at that in a second. Yeah, I know it. I was watching a YouTuber, another YouTuber, and I was talk about earnings, and I saw that. Holy cow. All right, well, there goes the tech sector. Like you say, market sentiment has changed. Yeah. Dude, I said it in the morning show, and I've been saying it for weeks. And I bought a tail risk fund a few days ago, and then I took off some bullish positions and added some salty about a month ago. I mean, a little too soon, whatever. Anyway, yeah, this thing's going down. This thing is going down in a hurry. I think that a lot more often than it happens. I thought that 2 August ago, and I was right. I got that one, but then I thought it 2 Septembers ago, and I was wrong. So, and then there's another. I think there's another time I got it right there. Anyway, all right. Well, whatever. All right. So Q. So yeah, Charles is saying 600's on deck. So 600 would be right here at this previous. I look at point of controls, but you could also look. Charles may be looking at this previous low at 599, 600. Whatever, yeah, that might be a good buy the dip. Let's put that on the chart. Don't anyone. I mean, if somebody's looking to buy the dip, just like I said this morning, I said I think it'll hit this green line. When I did it this morning, it was up here. It was like, 10 o'clock. It was right there. But I had a feeling of it. Anyway. If you're looking for a dip buy, the green line or the trend line would have been a bad thing for calls for tomorrow or for the end of the week. But I don't know. I'm just not that bullish. I don't think Charles is either. But all right. Well, so that's the Qs. Let's look at the SPY. SPY look exactly the same. It just okay. First of all, I hate this moving average cross thing. Let's get that done. The only time I like to have that up is for the all right. I really just like the prices. Well, I do like to see where the 200 is, but on the short-term chart, I mean, the prices and the volume profile. So if 600's on deck, in the Qs, that I think the equivalent probably would be 676 in the SPY, which would be challenging this swing low and looking for liquidity down here. And there was a bullish up gap here that there were still bulls here when it revisited. So, and there was right here too, who knows if there will be again. They may have exhausted all the buy orders. All right. So that's that. All right, so let's look at Bitcoin, gold, and silver. Yeah, we'll look at Chipotle too. And why did you say there goes the tech sector? Did the sentiment's definitely changed? I agree with you, and I agree with you. The tech sector's done. But did the tech one miss earnings, or were you saying that because of CMG? You're selling call spreads on XOM tomorrow morning. Nice. You're not buying the rally in oil energy. Hey, Andre, that is nice to see. XWQI has already declared its first monthly dividend. That's going to be a good one. So are the ones from Tap Alpha. I mean, the reason I mentioned them together is because they're doing similar stuff. All right, let's get this. Let me hide that. All right. So, I mean, Bitcoin also, but gosh, Bitcoin just keeps making lower lows. But this is the area where we're expecting, buyers, but I'm ready for them to show up. I mean, the other day there was buyers here, and they had enough juice to get it up almost 80. You know, this afternoon we sunk down to about 72, and they had enough juice to hit 70, almost 77. But that's just not a lower highs and lower lows and lower highs is just not a good sign. Well, hopefully we're closer to the bottom than the top, but I mean, this is ugly. All right, so now let's look at gold and silver. I saw silver pull back into the close. Now, gold finished up 6.36. Heck yes. And it's up after hours. We like to see that. Hey, Marcus. Hey, BR. Now, let's see here. Silver, on the other hand, pulled back and covered about half to 2/3 of its gap. It's still open, though. The fact that it's still open, I mean, if you're a bull, you could say, okay, I'm bullish unless we get a close under 73.84. I mean, you know, unless the gap closes, you close back down here. Then you were wrong. But if you're bullish, I think you could play it probably against the gap. Or, I mean, if you're really bullish, you could play it against this low or something. I don't know. But if you're bearish, you're probably making a lot of money right now. I mean, depending on when you got bearish. I mean, if you got bearish before it dropped up here somewhere. It was only up there Tuesday, Wednesday. It was up there for 4 days. I thought about it too. Oh my gosh. All right. Well, that's over. All right. Well, whatever. K yield flipped green. Oh, it did it. Did it. Okay. Well, good. I like to see that. I like to see K yield flipping green. So let's show how we can show that with let's show that on the charts. So, on here, it's still underwater since the time it's been out. First day close was at 23. Now we're at, well, that's not right. KU. I mean, KU's closer to even than this. Something must be wrong with this chart. It almost looks like dividends aren't adjusted. Yeah, they aren't adjusted. They didn't adjust them. Yeah, I know it should be. Yeah, there we go. Well, it's closer, but 23.46. Okay, well, whatever. Hang on. I forgot to do the freaking Diversified Diva spreadsheet today. Although the since inception return should still work, so we check that out in a second. The daily return won't work because I forgot to update it this morning. Let's just do it per SPY. I mean, it is getting close. All right. Did K-Yield crash today or something? Yeah, K-Yield's at 2074, but it was up today. Anyway, let me look at the Divas. That's why I'm supposed to keep my own stuff, but copy the Diversified Divas. Okay, so the daily change won't work, but the rolling total return still, today's change got right in here. The daily percent changes is right. Let's see if blocks it down 703. No, I don't know what's going on with the Divas. I guess that's yesterday. I guess maybe it. Well, no, KYLD is down 10% because they are down 10%. That is a thing. It was because of that big one-day drop in golden oil. Anyway, yeah, K-Yield started 25. Okay. So the first day close was 23. And when you hit adjust data for dividends, it sometimes will adjust that. But I get you. So started at 25, it's trading at 20. So real simple way. That's a real simple way to look at it. Start 25 is trading 20, right? So let's go. All right, so 3, 6, 9, 12. Somebody tell me what 16.5 times 12 is. My Siri doesn't work, right? Ask Siri. 16.5 times 12. Well, but why would I do it times 12? It's not times 12, it's times 52. What am I thinking? What am I thinking? All right. $8.58. Or, well, no. Of course, it's times 12 because that's how much dividends have been paid so far. I'm not trying to extrapolate the whole year. All right. So you got $1.98 in dividends so far, give or take. I just did it real quick, as you guys kind of saw. I took a shortcut, but they've been paying around the same. Yeah, that's good. I mean, they have been 16.5 times 12 is it. Okay, so yeah, total return, your price, it did open at 25. First day closed at 23, whatever. But because it came out of the wrong day, remember, it got killed on the first day. Anyway, but from 25, it's almost 21, it's 20 and 3/4. It's down 4 1/4. Okay, but it's paid $1.90. It's paid $2 in dividends. So it's down 2 1/4 on something that cost 25 or 23.50, depending if you look at the first day open or first day close. So yeah, it's down 10%. But anyway, and the thing is, it's still the best performing one. I'm not talking bad about it. It's still the best performing. The only things that are beating it out of the other funds are GPTY, and not by very much. But QLDY is spanking it pretty much at this point. Qs and SPY, they should be spanking it, and Chippy. So you have 2 yield max stocks throttling it. Now, those are probably the 2 best yield max stocks. I didn't put Big Y on here. I bet Big Y throttles it also. But those are the 3 best yield max stocks. That doesn't mean anything necessarily, but it's definitely making the other divas. Like I say, look at these morons down here. Alti and WPay, come on. Alti, anyway. And LFGY is taking another leg down. I mean, LFGY is like, hold my beer, Alti. I'll take some of the heat off you. LFGY is going to try to outrun, I guess, maybe try to outrun blocks on the downside. That might be something. It's happened before. Anyway. All right. Well, all right. So what else do you guys want to talk about? Or let's look at some good divas. Or let's not, I mean, we'll talk about whatever you guys want to look at. But anyway, do you think, is it frozen? Is it still frozen? Is it still frozen? Frozen? Anyway, I don't think it is. I can see myself there. Hello. All right. I got you, Retire. How you doing, bud? How are you doing? All right, let me catch up with these questions. K-Yield's total return down 13. Well, I just did it in my head and came up with down 10, a little bit less than down 10, but whatever. I mean, it may have been down 13 yesterday. Some things you look at, or like dividend channel sometimes is a day late. It shows the previous day's close, whatever. Anyway, some people use I go through this all the time. Some people use the 25, the IPO price. Some people use the first day's close. I mean, anyway, but it is something. I'm not talking people. There's a right way to do it and a wrong way to do it. I'm not just saying people just do whatever you want, but different services have different interpretations of it. Yeah, I got you. I mean, but the sentiment of what Charles is saying is right. 10%, 13%, whatever. It's down a lot. Qs are down a half point. So, I mean, 13 or 10, it's still a lot. I'm not disagreeing with what you're saying, Charles. But K-Yield flip green. All right. Tiger. Cheerleading stocks going down. Don't make cheerleading stocks going down. Don't make them go up. AMD earnings great. AMD to the moon. Good. Hey, Jeff. How you doing there, bud? Yeah, AMD. I thought I heard somebody say tech's over and everything. Maybe not AMD, but what about what's going on with this? Why is just AMD going up and not Broadcom? Why is Broadcom trading? I mean, I just haven't followed. I'm being serious. I haven't followed lately. So we have Intel close to all-time highs, AMD. Maybe other than they're just better companies. I mean, but AMD, Intel, and of course the best company of all of these is NVIDIA. Are not the best. Maybe the name brand company, although it hasn't been. It doesn't look like it's been performing as well as those others I just showed you. But then you look at a little like Taiwan Semis in the dumps. I saw a Taiwan Semi. Well, no, it was somebody else. I saw one of these was really in the dumps. They not all of them are on all-time highs like AMD. Anyway. All right, so Tiger's saying true, but K-Yield did perform better than most pairs. Yeah, it's been performing. It's the best. Yeah, it's been doing the best of the really high yield funds where the managers are able to choose their own stocks. It's been doing best out of that subset of funds for sure. Um, they just came out. I mean, let's. I mean, so K yield. K yield's a tech fund pretty much. So I mean, it's not unfair to compare them to the Qs. The day they came out was the all-time highest for the Qs, the last day of October. And we haven't, and we, other than one day about a week ago, we haven't returned. And we went straight down off the get-go. Now, having said that, the Qs are only down off 1% or something, so anyway, we'll keep an eye on it. We shall keep an eye on it. 198, yeah, good job, Marcus. Did you get it faster than I did? You probably did. Yeah, that was easy. Well, the 16 and a half added, I didn't really add that much because you just had to add 6 at the end of it. I could have done that in my head too. I should have instead of using the computer, because you just multiply it by 10, and then you figure out the extra half point that you didn't multiply, and then you multiply it by 2.5 more, add it all together, and it equals 198, right? Yeah, absolutely not for everybody. I'm not recommending it, but I'm saying they all look like money pits to me. Here's the whole damn chart. Every one of them a money pit, but of course the Qs are down over the same time frame too. But not one of these, have been able to outperform the Qs. But of course, these are all paying. The lowest one on here pays. These are high yield funds. That's why they're divas. If you want to be, if you want to have a better chance of outperforming the Qs, of course, you just choose something like T-SPY that pays a lower, or TDAC or whatever you choose. You find something that pays 8, 10, 12, 14, something like that. You have a little better shot. All right. Rod is the legend. Camera unfrozen. Good to see. Good to see. All right. So, Degenerate. After all that talk, I missed that live stream last night. I'll let everyone go watch your live stream. And then I tried to find us. Anyway, next time, put your link here. You can start putting. I don't care if you promote your stuff here. If I'm having a 5 o'clock and then you have a 7 o'clock video planned or something, go ahead and throw you can. It's not. I mean, it's nice. You can ask me first if I mind doing whatever. But I don't care. If it was somebody in here that I didn't like and was causing problems, or somebody that was kind of making wise guy comments and or whatever, maybe But I mean, on somebody that helps the other people out and stuff, you put your own stuff in here. I don't care. I'm happy to help. Hey, SB. Okay, Ricker's name of your strategy from her. Oh, is that what it is? It a real strategy, or did I just make that up? I was thinking Rick Ross. I've been thinking of names all day for it because I like fun names, and I almost went to AI. But then I almost thought about, because what I do different than a real reverse calendar ratio spread, if there is such a thing. But there is a reverse calendar, and there's a ratio reverse calendar. So, of course, there's such a thing. So, but what I do that makes it different is define risk. I do it where you can go to the park, talk to a girl, and you don't have to necessarily close your position. In fact, if you want to just let your position, in fact, you don't have to close your position. You don't have to put on a new position. It leaves you net long. So, like if you put on that position and the market goes down, market goes down 1%. Okay, you take off, but the puts that you bought don't expire for 2 days. The puts that you sold. Anyway, if the market goes down, you could. If the market goes down, the puts that you sold expire, and it leaves you with the puts you own. Well, I'm trying to think of that. Well, I have to look at the option chart. We can talk about that in a second. But anyway, yeah, I was trying to think of a fun name for it. And I was thinking Rick Ross. I don't know. I mean, or Rick Roll. You know how whenever you get Rick rolled, or I was trying to think RCRS, remote control, radio. Anyway, I like reverse calendars. Any of you guys ever do any reverse calendars? Google. It's just a good long volatility play. It's a good play when you don't know what's going to happen, but you just know something's going to happen, up or down. All right, Google, Amazon next 2 days. Maybe they'll move the market. Hopefully not down. AMD had earnings. Oh shoot. All right, AMD had earnings. I guess I didn't look at that. Oh, yeah, I didn't see this little thing. It says post right here. Okay, well, it's And it's still looking better than some of those other ones, but now it's not looking a lot different than, I mean, to me, Broadcom just seemed like, it's been kind of trending down for a while. Maybe it's a harbinger. It looks like Broadcom had a gap up at the last or two earnings calls ago, same time AMD did. The AMD gap is still being respected, and there's still buyers here. I mean, they run it up to here, they run it up to here. I mean, so far there has been, but it's getting less and less each time, and we're about, a gap's always better on the first touch or second. You know what I'm saying? Like anything, a trend line. But all right, well, yeah, thanks for pointing that out, Marcus. I didn't catch it. Hey, Bikerman, you're sweet, Jeff. Jeff is talking to Marcus, but he's evidently about more than halfway through a goal. I like to see that. All right, so let me go back and try to say what I was trying to say. So I don't know if any of you guys saw that. It was a terrible video. I didn't make slides for it. I didn't know what I was doing. I feel sorry for people watching. I try to make videos. Lately, I've been trying to make videos with scripts and well, not lately, but like last fall, scripts and things. And anyway, sometimes I just like to get on here and talk about options. And if I took the time to script it out, and I've tried it a couple of times, by the time I finish scripting it out, I've lost interest or something. So anyway, all right. So let me show you what I was trying to. Let me show you what an RCRS is for people that are wondering. Let's just build one now they don't have a reverse. You can start with just a reverse. Well, they call it a reverse calendar, but they do not have a reverse calendar on here. So I just do it to put it in here. What the trade actually is. Well, if you want to go to option strat, we'll just do it in the Qs. Let me show you that. That's for Matthew. Anyway, I hope everyone read Matthew's post this morning. I thought it was good. Okay, so here's that's what a counter trade. A counter trade is basically the similar profit loss as a butterfly, or similar profit loss as even as some type of condors. I mean, it's the type of profit loss where you want a steady stock, stock not to move too far in either direction. Doesn't have the same shape as a whatever, but that's a standard. That's a calendar spread. Okay, so but this is the confusing thing. I think a lot of people miss this. You have a calendar spread. You're short the one that expires tomorrow, and then you're long the one that expires the day after tomorrow. And so it's not that risky of a trade, because once your short expires, you're just net long. You're just long. I mean, once this goes away, you just have a put, but that's no big deal. That's not a lot of risk. But what professional traders do, I read about this in a book, and of course I didn't think of this on my own. But what they do is they will actually reverse it. So you'll make the option, let's see, switch expiration, and then this option, switch expiration to the fifth. Okay, and now you get the opposite play. The other play is a short volatility play. You want less volatility. This play is a long volatility play. Okay, to make this, and there it is. That actually is a reverse counter put spread is actually a thing. I mean, in fact, it even has it doesn't have a pre-built up here, but at least they do give you a little. They do have it. I just now discovered that they do have your okay. They're calling it an inverted counter put spread. All right, so here's what I do to make it have tail risk, though, because that's a pretty cheap trade. You could do it for $100 credit now, but you need the market to move more than 1% in either direction by the end of the day tomorrow, because your short expires. It's really a one-day trade. I know it's spread over 2 days. Anyway. What makes it a ratio is you just do double long legs. So now at this point, you've sold a put that expires in 2 days, costs $5, but you bought two puts that expire tomorrow that cost $4. 2 times 4 is 8. 8 minus 5 is 3. This trade cost you $300. It's a debit. another kind of good benefit of these reverse trades are, I don't really understand why this happens, or I don't want to go into, but in an up move, it's not that you don't have extra, you can have less loss, depending on like that. I like to structure them like that. So, because lots of times when you put on hedges, especially like in a down market, what happens in bear markets? That you have some of the most just face ripping runs the other way. So this is the kind of strategy you can do, and it's going to bleed. If the market doesn't move, yeah, if the market doesn't move, you wasted whatever. If the market doesn't move, you wasted some money, potentially up to maybe $500, depending on how far it doesn't move. But if you get a big move up, it's a free trade. If you get it's basically, so I'm looking at it as cheap insurance. Okay, but the problem with this trade is, and that's what I was trying to explain to everybody. I'm more interested in this stuff probably than you guys are, so I'm sorry if you. But the problem with this is, like I say, I get on I do something fun. I start playing my guitar and I forget that it's 3 o'clock. Boom, and this thing, and that this option expires. Okay, and it's 3:01. I have to go all night. And then I wake up with a naked short, and wonder if war breaks out overnight. We're down 3% in the morning, something. So that's why brokers won't let you do this trade. Though lots of brokers will charge you $12,000. Tom Sosnoff has talked about this topic extensively on Tasty Trade. However, so what I do to do this in real life without having to post that much margin and without having to worry about necessarily closing the trade is, all you have to do is you need to buy a put in the 2-5 time frame, the same time frame that you sold. You buy it and you go, now what you want, change expiration, it defaults to 2-5, and then you go, you adjust it based on the debit and credit and the risk and reward and stuff. But let me just do that really, really quick. Yeah. Okay. So you do something like that, and yeah, it costs you $125. If the market doesn't move, it can end up costing you $500. But if you get a down move of more than 1%, now that the thing is, you have convexity too. This is convexity spread because you have this put that you bought. You just bought this put for margin control, so you aren't naked. You aren't naked when the other one expires if you forget to close it, and so the dealer doesn't try to charge you margin. What you've also done is you've added an extra long put, so you have 1, 2, 3 puts long and 1 short. This is a long volatility trade. If volatility should explode, market should drop, and volatility should explode overnight, you're going to have a tailwind. You're going to have convexity. It's going to go. You're going to make more than you would have if and it's so you have, anyway. So, and I think what Tuttle wants to do, and he didn't really go this far, but he says it's an overlay. So I'm just thinking, how would you put how much would you use? So I'm just thinking, wonder if you had $100,000 worth of Qs, or just $100,000 worth of long, a long portfolio, high yield funds, whatever. You're trying to protect against black swans. Just stick with the Qs. The Qs example is more straightforward. You have $100,000 worth of Qs. All right, if you do this, the way this trade gets beat is in a quiet market. If the market doesn't drop 1% or doesn't go up more than 1.5% or something, you're going to have a loss between $200, $300, $400, $500. However, in a big up move, you should have. I usually make it where it's kind of neutral in a big up move. It depends on, anyway, whatever. I need to make it. I'll try to see if AI can make some software that finds the best strikes or something. But anyway, you guys get the idea. But I like the idea of these trades. But back to what I was saying. So what this does, what happens if you go, you forget, you take a nap and you forget, you wake up and your options expired that you bought. I mean, that this one's expired that you bought. So you're left just with this short calendar. I mean, you would have been had you not also bought this. So let me show you this. When this one expires, you're just left with a put spread. That's the same thing as the caller. I mean, that's just a caller. You can do a caller with calls or puts. It actually doesn't matter. If I ever showed you this, watch this: 2 calls, 2 puts, doesn't matter, same strike. And it might make a little difference. I mean, depending on it does matter for tactics. And one of them might be priced a little bit higher. I mean, it might have the one way to do it might be a little better than the other. But as far as the trade, you know, that's a bull call spread and a bull put spread. Same thing. Calls and puts are interchangeable. They're basically the same thing. But anyway, so I really like this trade. But I really like Tuttle's trade too. So let's look at, actually, let's look. All right. So I got that one screwed up, but I'm just not going to save it because let's go to save trade. Okay. So it'll revert. So Matthew's idea that he put in the newsletter, if you guys read it, is to sell a, watch this. He's just selling a call spread. You sell it, you know, and then taking, and that's for credit. This is kind of like the take your right to dinner trade, but and then using the credit to pay for about half the price of the put. This put costs $345, but it doesn't really cost that much. And he's calling this trade a Siegel, and so it's a similar concept though. Anyway, when I saw this trade, it made me remember my Siegel, my version of it, the way I like to do it. So anyway, all right. So what are you guys? Yeah, XPay definitely does. XPay's fine. Yeah, I agree with those. Hey, Mark, how you doing, bud? You must be through with dinner by now. Well, 6:30, maybe so. All right. Let's see what is going on. Since we have since we now have a slew of high yield ETFs, how does everyone feel about them? Yeah, okay. Andre is big into T-SPY, SPY-I, and GPIX. Those are about as blue chip as you get. And those are good ones. I don't have any argument with that. You know me, I like most of these. I think most of these have a purpose. I mean, somewhere. Some of them I don't get. And I think there's a few of them that are just bad, that are just a bad strategy, let's just say. And that would be feet. I always mention feet. And there's other ones too, in my opinion. All right. Tiger's optimistic for TSYX. Referencing T-SPY with some leverage. Yeah, weekly payer. Incepted in a period where everything drops every other week. Yeah, well, that's true. XPay and SPY-T definitely coming. Yeah, those are good funds. Mark is in the house. So Andre is saying TSYX will declare their first dividends sometime. It will for sure be, yeah, on the good fund list. I don't have any problem with it. TSYX is from Tap Alpha, and then it has a competitor that's doing the same thing from Neos. I'd imagine both those do all right. You know, I tell this story all the time, but Sai Katara premiered T-SPY on my channel. I was the first influencer to have Sai Katara on. No one knew who he was. He didn't even have a fund out. And I used to have people that used to email me, a firm that would hit me up unsolicited, and they would hit me up with fund manager interviews, right? They say, we could set you up on an interview. They didn't charge me anything. They say, we could set you up on an interview with these 3 managers, Will Ryan, you know, the Tap Alpha, or Sai Katara, or whatever. So I would just take him up on a different manager every once in a while. That's how I met Will Ryan. I don't know him. You know, that's how I met Sai Katara. But anyway, so yeah, that was, I really like Sai. And he, if you talk to him, and I have it on tape somewhere, he'll give our station credit with helping him launch T-SPY. I mean, because our guys were really receptive to his option pitch and stuff. He's a good guy. All right, you eat kind of late. That's good. That's good. You guys are adults after all. I love eating late. I was watching a show yesterday. I don't know what it was. It was on YouTube. It was some like Instagram account. It was talking about rich kids in New York or something, or growing up in New York. It was talking about like people that live in New York and that they don't eat dinner, especially on the weekends, till 9 o'clock or something. I was just thinking 10 o'clock. I was just thinking that's the coolest thing ever. I love a late dinner. Nothing I love more than a late dinner. Especially, and I like going out to late dinner too, but having one, you know, yeah, I love it. She hasn't been working over a week. I got you. Fish. Oh, and Fish is in the house. Andre has put Defiance and Round Hill under no-fly list. I won't touch any of their funds if Yield Max messes up Chippy. I hear you on that. Well, here's, you know, you didn't ask me for my advice, but I'm going to give it to you anyway because that's what I do. Chippy's going to fall at some point. It's not going to have anything to do with yield max. It's going to have to do with the stocks they follow. So anyway, but so I'm saying, if it's great that you have a good profit in Chippy, but it might be time to take a little off the table. That's just my opinion. But anyway, not financial advice. The target 25 funds, too soon to tell. They should be better than the ones that are no target if you're concerned about NAV. But yeah, too soon to tell. We'll keep it on it. The thing is, some people don't need that. If you don't like a lot of risk, and you don't, and especially if you have a little bit more money, you can just use funds that pay less. I mean, and that's easier said than done. But I think some people are just starting off with, and have a $50,000 account, and the concept of having something that pays 50% is so exciting at first and stuff. But once you have $1 million or something, or $500,000, you know what I'm saying. And if you have a job, get you some triple QI, get you some blue chip funds like Andre, especially if you don't like worrying about it. I think some people like me like to mess with it. It depends on what your personality is too, right? XSPI declared a 70-cent dividend. That's good to see. I like to see that. So let's go look at XSPI. Okay, that's the boosted. Okay, so what's the other boosted one's name? Is it called XSQI or anyway? So these guys paid. It's weird they announced the dividend on the first day. But on the other hand, it's just math. They know about what money they're going to make from selling options. It doesn't matter if they win or lose. Their option trades lose. It comes out of the NAV. You know what I'm saying? To them, it doesn't matter. So they probably, maybe they looked at what they think they can make, and they're just making it a set. Maybe they're managing their dividends, and they've declared we're going to pay 70 cents. That's fine. Yieldmax just does the different thing. And Tuttle and people, remember, Tuttle made a lot of money his first week and paid like a 300%. I mean, it's kind of the manager's choice. Anyway, Andre's saying he can deal with Chippy falling because of the underlying. Yeah, I got you. I'm with you on that, Andre. I'm with you. I'm just saying Chippy will drop at some point in the future. And you know that too. It's as long as you know that. What do you think about GPTY? GPTY's a really, I mean, I'm an idiot because I sold all of it and I kept Alti. What kind of idiot am I? I made a bad, like I say, I'm not an idiot, but I made a bad market call. Let's just say that. But let's just do GPTY and Chippy. Now, the thing is, GPTY has a bunch of the same stocks as Chippy has in it, right? And now, the other thing is, yeah, that's a good look, though. That is a great look for Chippy. And yeah, GPTY has been dead money because GPTY is AI and crypto kind of more, and yeah. But I thought chips were basically AI. But anyway, I mean, GPTY is more than just AI because it's also Salesforce. It's big data. Let's just say. I think maybe big data is a better way to call it. The reason I think it's AI is because they named it GPTY. But another thing is if a person loves Chippy, here's another way to stay long the market but de-risk a little bit. If you're worried about Yieldmax messing it up, I'm more worried about the market messing it up. But whatever. If you're worried about Yieldmax messing up Chippy or the market messing up Chippy, especially the market messing up Chippy, would it not be an option to get a little soxy, take a lower dividend for a while? The lower dividend makes more upside. There it is. I mean, it's just math. You can either have your money now or later, or not at all if you buy Moderna. I'm just joking. Moderna's actually the best one out there. Anyway, but that would be a way, because on the other hand, though, the opposite of that is Chippy should actually have a little bit better downside performance than Soxy because of the yield. So I don't know. Just stay with Chippy. It looks like a good one. Maybe cut half of the back. But yeah, there's no problem with Soxy's good. Soxy's good if you, like I say, if you can deal with the less yield all day long, get Soxy. Chippy and GDXY are the only Yieldmax funds. Yeah. I mean, I only have ULTY, and as you guys know, I've sold like 2/3 of it. I have like 8%. I mean, or of my original position, I only have 1/3 left. So, and I sold the first third at a nice big profit. So I'm fine on it, thank God. But yeah, if I could go back and do things over again, I probably would have kept GDXY, kept GPTY, and cut blocks and Alti. But you can't see the future, you know. So I mean, oh, you use the income from Chippy to pay the bills and all your other funds. It sounds like we're on the same page, most of us all. Andre seems to like, Andre's more into the blue chippy stocks. Sometimes I talk about these crazy ones from, you know, Max, whatever. I talk about all of them. We talk about Granite shares. We talk about all of them. RJ is saying he's satisfied with 12% yield since you don't use the money. Yeah. Well, yeah, it just depends. I mean, you could have it's really that simple. You can have your money in the form of yield, or you can have it in the form of, potentially in the form of NAT. Here's the thing. Let's going back to this example. So you go back a year ago, or go back 6 months ago, and if you don't, let's say you aren't trying to live off this, you still have a job or whatever, and I show you the bottom chart here. You want Soxy all day long. You don't need the income, or even if you want a little income, 12% is fine because you have a job. You aren't, you know, so that. But wonder if, but that's with the benefit of hindsight. If we looked at a 6 month period where the market cratered, given the benefit of hindsight, you would have actually rather had Chippy, because it would actually go down a little bit slower. They're both going to do terrible. You'd probably rather have neither of them. But anyway, it's just kind of ironic. You take the money and buy different funds. Yeah, I got you. So in other words, you aren't cannibalizing your portfolio. You know, a lot of, when these things first came out, Jay was saying, well, really, the money's not, he didn't say it like this, but that it's not really all yours if you're worried about NAV, but you always have the option to reinvest in it. And yeah, that makes sense. Some people do. Some people start saying, no, that seems like BS, because you're telling us to reinvest in your own fund, and it's just a scam. Okay, well, I get that. But then I came out with the video, and Jay didn't say this, but I said this. Reinvest in something. You can't cannibalize the money. If you put it in your pocket and you spend it on a depreciating asset, that's fine. I mean, but if you, on the other hand, if you're taking the money and you're buying growth stocks with it, or you're, I don't know, saving the money and putting it in real estate or whatever, the money's staying invested in the investment sphere, yeah, you're fine. Then I think it's fine. And now, but then whether how well or not you do comes down to how talented you are picking your investments. I mean, but yeah. So anyway, all right. Biggie's acceptable, RJ. I agree, Matt. Okay, so let's see. You take the money in the big fund, buy the big funds. Okay. HOOW is your biggest loser, but you only have 100 shares, 170. I bet you wish you only had 100. And holding to get my money back. So you're just getting, that's what some people do also. Some people buy these and try to turn it into an annuity. It's like I buy it and the money's gone. The market has it. People did that with Tesla. And I think, or they did it with lots of, I think lots of times they got their money back. I mean, not always. There's no guarantees in life, but eventually got their money back. But yeah, I mean, no guarantees. You don't drip, you buy dips. Good pick, RJ. Same here. Do you guys think today's dip's viable, or do we have to dip further? I'm thinking maybe 600. And I mean, it's because Charles said it first. And then I looked at the charts, and yeah, we'd probably have 600 on the Qs. And it was like 625 on the spot. Anyway, but I think that might be a good place to do it. All right, RJ, Max, you got some BTCC and ETCO bi-weekly dividends. Comparing those to now, is that bi-weekly? Does that mean twice a week or once every 2 weeks? I'm never sure about that. But we'll look. You don't have to answer that question. Let's just pull those up, and let's just pull up BTCC, and it will show us. I'm guessing every 2 weeks, right? No one's good. Yeah. It looks like it went from monthly to every 2 weeks. That's cool. That's Grayscale Bitcoin cover. Wow, have I not heard of this one yet? BTCC. I swear to goodness, this one is not on the max factor. Now it looks like it has the yield max chart pattern. I'm just joking. It actually has the Bitcoin chart pattern now. I mean, that's, like I say, that's Bitcoin's problem, not yield max's. Or in my opinion, the yield max, I mean, when Bitcoin was going up here, you could see how much upside they get, because April to June in Bitcoin was just a face ripping rally. I mean, that's when Alti went up. Remember that? You have from, I mean, so, and this went from 32 to 38 and kind of topped out. So I think they probably sell pretty close to at the money options. And I mean, they focus on yield, and look, they're paying 79%. They could go super far out of the money, pay about 20%, like something like probably like what did these guys, BTCI, or they could not write options on the whole portfolio. Now, look, here's the thing. BTCI pays half the money to you up front. Like I always say, it's your money. You get to choose how you want to back. You want to back weekly, you're on the back end with NAV, potentially. And so here you go. Well, if you want it on the back end and NAV, potentially you buy BTCI for no other reason, because it has a lower dividend. If you could find one that paid lower than this, it might even, but anyway, but just comparing those two to each other, BTCI, because it didn't give away all of its money up front on a weekly basis, was able to go from 45 to 65 and that's 50%. That's respectable. And this is not dividends reinvested. There's no button you can push. This is just NAV, but they were able to catch some NAV upside. So that's good. But of course, like I say, they're just, man. Anyway, I like that. I need to add that to the max factor. I cannot believe I didn't have that one in there. Okay, ETCO, and what the heck is ETCO? I think I've heard of that one, but I cannot believe I didn't have the Grayscale. I just didn't think Grayscale had income. They have these trusts that are usually long only. I just didn't know about their income funds. Look, this one pays 64%. So I bet it's going to do really poorly on NAV also. It's kind of early to tell because Ethereum's gone straight down since October. And I mean, let's look. I don't chart Ethereum, but I bet you it's gone straight down since October. What do you want to bet? Yep. Yes, sir. Actually, top down August. Just for fun, let's see what Bitcoin was up when that BTCI caught 50% upside this summer. Back in NAV only. That was in the same time period. ULTY caught 15, not 50, but 15%. NAV upside alone this summer. That's really good, especially for ULTY. We'll see what Bitcoin was actually up. So from April to, what do we have? We have 75 to, what was that, 120, 130? So we'll just call it 75 to 125 is 50. We'll make it 55. 55 on 75 is way more than half. It's like 2/3. So yeah, the Bitcoin was up 66, 70% in this rally. And, but BTCI was up 50% on NAV alone during that rally. I'm making a good case for BTCI. I'm sure these other ones, these Grayscale ones are good too, but I'm trying to make the case for BTCI. I like the way BTCI's price action has looked. Now that, I mean, and I bet so we could pull up the other, it's the same thing. Well, I want to get off of this right now. Let's go to ETCO. I mean, I was already had that up. So this one is, it's the Ethereum. Okay. All right. Pay 64%. And get this, that's not over a year. That's over about half a year. That's going to be triple digits. So this one's going to be a hot mess on NAV. Andre has everything in his portfolio: high yield growth, closed-end fund, dividend growth, and individual stocks, mostly railroad stocks. Nice. Once every 2. Oh yeah. Okay. And you bought them on crack, and your brother retired from CSX and built a brand new house with CS stocks. That's awesome. Those stories are awesome. I just said those stories are awesome. Stocks are the last great way to get rich if you had a job. It's a way to own a business. If you're a doctor or a school teacher or whatever, you can still own good businesses by buying shares in NVIDIA or whatever growth stock is. Yeah, so I love that. And then if you can get your 401k and your match, and you just or, or your company, your ESOP, your employee stock option program, and it happens to be in a good stock. I mean, you have to work for a company whose stock goes up. No free. I mean, but anyway, yeah. Congrats to your brother. I bet you half these houses in my neighborhood are paid for with Dell stock. In fact, I know they are. I know they are. Hey, Mayor. Yield to cost is flat on BCC and ETCO. That's good to know. That's good. You like a good flat or even a rising yield to cost, right? Good flat yield to cost is great. All right. Amazing job. Oh, you like that, Mayor? I'm glad you like that, because I thought I was almost didn't release that video. I just wanted to make a video and I kept procrastinating and I should have wrote a script. But then I thought I'm just going to come on here and talk. And I brought up a few windows and I didn't plan any of it. I just got on there and talked and it went way long, but I figured the people that didn't care about options would just turn it off. So anyway, I'm glad you watched it. I'm glad you liked it. We're going to start, like I said in the video, I think I'm going to start trying to maybe make some content on that strategy and on Tuttle strategy. Tuttle strategy is probably better than mine. Like I said in the video, or not better, but there's probably a reason he didn't calendarize it, because he's a professional. Lots of times calendar trade, I'm just telling you this so you guys don't do this. So I said just going to study. Lots of times calendar trades look great on paper because simulators are unable to simulate the idea that you have legs in different different expiration cycles, and they're unable, as best as they try. Tasty Trade can kind of do it, but it's hard to say. And lots of times calendar trades, a calendar trade is like being at a bar at 1 a.m. Everyone's looking great, and it's fun time. Let's go home. Let's go get drinks. Whatever. Let's go after party. And then the next morning they don't look. Anyway, that's what a calendar trade is. Calendar trade looks good in the simulator and everything, and then sometimes by the time you get to the next day and you look in real life, it's blown up. And what it is, like I say, it's because it has a hard time factoring in the different decay rates. And really the decay rate is that's what your edge is. And so anyway, so don't anyone do that. Let's just look at it for a couple of weeks and see if there's any validity. I want to get Tuttle on the show. I'm gonna send my trade to Tuttle and have him tell me what he doesn't like about it or why it won't work. All right, BTCI used to be one of the best. Yeah, well, what happened to it? I mean, I guess I got you. Okay, last year Union Pacific Railroad. So, you lasted 1 year at Union Pacific. Oh gosh. Seems like I had a family member that had railroad stock. I'm trying to remember who it was. I think it was someone on my mom's side of the family, and she ended up inheriting some of it. Not like a lot of it, but it was just like, it was more fun to look at the certificates and the old-timey names. Anyway, your brother late fixed the rails. Wow. All right, Mayor, still managing to box crypto by holding, I love this, BTCI, which is good in a bull market, Winter, which is good in a bear market, plus fiat, and they cancel out each other's NAV move. So are you doing 33, 33, 34 or something? Or do you do like 50, 25, 25 or 50, 30, 20? Or because I might want to, I'm just thinking, I'm trying to think in my head, I would probably try to be, heavy on the BTCI side a little bit, but whatever. But if you're trying to total cancel each other out, but sometimes just that's not always the answer anyway, but that's good. I'm glad that's working for you. I'd love to know the percentage on that. Yeah, hit that old like and subscribe button. That's really, thanks for reminding me, Rod. I appreciate that. So I'm trying to do that. Gosh darn it. I'm so bad at this. Everybody, remember to hit that like and subscribe. Also remember, not financial advice. All right, but let's get back to questions. All right. You guys are talking railroads. Okay, Bitcoin goes down, you'll switch BTCI for XBCI. Let me punch in XBCI and see what we're dealing with here. XBCI. Oh yeah, of course. I'm sorry. Well, that's the. Oh, I didn't realize they were doing it boosted on the BTCI also. I just thought that existed on the SPY. I'm sorry. Okay, well, heck yes. Now that's going to be interesting. If nothing else, because it's NEOs. I'm just worried about. I'm worried about leverage. So, I mean, the NEOS funds are great right now. Why mess them up? Tap Alpha's fun right. This is just my fear. My fear is they're going to make a product that would they add in the 50% leverage or 30% in whichever case, that it kicks it up in it just gonna, I just think leverage works both ways. Math, it's going to be harder for those funds that perform on NAV. If you know, not that they still might not be good funds, but anyway, ISBG's working good for you now. Yeah, I'm just leery of the straight leverage. But that's why I like the lightning spread so much, because it's like embedded leverage inside the spread, and it's only between two certain points. Whereas, if you I'm just leery of leverage, but and I bought WPay. I mean, it's not like I'm afraid to use it for a tool. Once again, I didn't think the market was going to crater. That was kind of an ill-timed. I doubled down on bullish. Anyway, but. Yeah, we'll start watching that. I'm interested in what they're doing. And just the fact they're from NEOS, I like NEOS is because JP Morgan and Goldman Sachs and stuff, although they do have really low expense ratios, it's just their funds are boring and pay low yield stuff. NEOS is also just as, in my opinion, it's a good brand because it's just as blue chippy, but it seems to have a little bit more forward thinking strategies and branding. And so I think, like I say, NEOS is a stick a gun to my head fund, and it used to be JP Morgan. So, so Fish is saying he doesn't hold more than 5, currently holding 15 in index, 30 in cash, and then the remaining is the dividend funds. Yeah. All right, guys. Well, is there anything we forgot to talk about? Let's look at maybe option strat. I know we've already looked at it once. Let's day traded active. I went ahead just for fun and did one in IBIT too. So right now we have a Matthew trade on the Qs and we have a Max trade. Then we're looking at IBIT. I'm just going to start studying these. I'm going to ask AI about them. Oh, but then I forgot to tell you, as far as the trade that Matthew put on today and that he put in his newsletter, and I shared the link to the newsletter, and I made some some stuff for you guys to download too, infographic, whatever. So here's how that trade came out. Matthew's trade, and I closed it about 5 till the market closed. And granted, the market bounced a lot. My trade was up like $1,400 at one point. Matthew's trade was up like $700 at one point. Anyway, the market bounced, and about 5 till the end of the day, I took them both. I took them both off. So that's the first days. But I'm gonna study these and make some more content. I really like. No one else is doing any type of content on reverse calendars and different. There is a guy out there, a good option bro, whose channel I like, and he does a lot of. He loves ratio trades also. He loves ratio diagonals and stuff and ratio calendars. But anyway, all right. Many traders are playing Russell 2000 now. So IWMI is a keeper, yeah, and it's from our friends over at NEOS. Mayor is saying BTCI is 46%. FIA, okay, the percentages, nice. Okay, so you are going to add more to what you're betting because, well, but on the other hand, you add the two together and it's just about even, yeah. I was thinking you'd want to lean long in Bitcoin, but maybe not lately you would want to. Of course, you could always vary that. If we get back in a bull market, you could make it, 60, 15, 15, right? But in this market, you can make it 45, 25, 25 or whatever. Yeah, I like that. Yeah, IWM has been on a tear. You know what I saw that really impressed me? I was going to ask people about this. It's a weird thing to me. Okay, this stock or this long short fund. I don't have it. I'm not interested in long short, but like I've always said, I think one of the true interests, one of the reasons I look at the Divas so much is to see what stocks they're trading. You remember when what's his name bought Cypher? That you should have bought Cypher Mining or whatever. So it's fun to see what things what growth stock. What I like option strategies, but it's interesting to see what growth stocks the guys are putting in their option strategies, or what growth stocks they're using just in other funds. how do people find it? Does anyone know about where did this one come from? So these guys are short anyway. But where did they had one in here that that was, well, I forgot. Maybe it wasn't this one. Maybe another company. But I know the name of the stock. You want to talk about the momentum stock? Look at that. What is this? Does that what is that? And why don't I have any? And how do you? I mean, gosh darn it! I've got to build some type of momentum scanner or something. These kind of things show up on momentum scanners, but these little stocks you never heard of. I mean, or I've never heard of. I mean, what in the heck is this thing even? Pulmonary vascular research. I mean, hit a double for 103% gain. Anyway, growth stocks are my first love, and stocks are my first love and stuff. But but options are cool too. But I mean, growth stocks are the fun. Growth stocks are how you get there. Options are what you do after you have growth stocks. I mean, options are what you do once you have stock, because then you buy stock and then you could sell covered calls. The old days before commissions were free, that's really all you could do. Is you could hope to work for somebody and maybe accumulate a lot of stock, and then when you retire, you could maybe sell options on Apple or whatever. You have a really nice life. Nowadays, you only have to do that. You can retire. You can work for somebody else, retire, and go buy APLW or APLY or AP whatever, and have it done for you. So Fish had 600,000. I'm sorry, Fish. Gosh darn it. You made 100K for Misty, and you were on house money. Isn't that frustrating? Oh my gosh. Misty saved you last year. It's not like those high yield stocks can't work, but it's a lot of risk, Anyway, I hope you got out before the damage. I hope you got out before the damage is too good, but before the damage is too bad. Let's see. Andre says he likes IW&I because it diversifies your portfolio away from Max 7. Correct. And I'm going to give you another idea on that. Diversifying away from the Max 7. I like that idea. You could also use an equal weight. And this is the only fund I know of that sells options on an equal weight. It doesn't look like the worst chart. I mean, looks like a good chart, really. Look at that. It's been flat. I mean, it's gone from 50 to 52. Paid a 9% yield. I'd say, for bear markets, this is the one you want. But for bull markets, I bet if we looked at the April to June, performance, it's terrible compared to some of the ones that are not equal weighted. Like, what's a real go-go one? Like Triple QI. Triple QI, definitely not equal weighted. This is a go-go one, and their April to June performance or April to August performance, I can just tell by looking, was a lot better than that other one. But Fish knows when to exit. Good job, Fish. Michael Saylor lost his. Oh shoot! I'm sorry. They always say crashing out. I don't know where that came from. Oh, he's crashing out. He's crashing out. It's such an internet thing to say, but is he crashing out? I mean, I might be crashing out too if I was him. To have you, I mean, it's. Of course, that's the exact wrong move anytime in the market, anytime you feel your emotions, or anytime in life, but especially in the market. Maybe if you're a poet or a musician, you harness your emotions, but anytime you're in a better view in the market, you got a problem. Anyway, good job, Fish. I'm sorry. And God, I feel so guilty. If any of these got yield match because I like them so much, I apologize. But I've been trying to be, I mean, like I say, I like a lot of them. I put my money where my mouth is. I did fine in GPT. I did great in GPTY. I did great in GDXY. Did all right in ULTY, especially on the first third. Even the second third was still above my cost basis, but I'm not anymore, obviously. Yeah, I hope not. Maybe it could turn around on the strategy bankruptcy. Yeah, Misty was hot at one point. So was NV. So was Tesla. At one point, you spent some money today, DCing and a little TQQQ. Nice job there. Yeah, crashing out. Exactly. When you're from the 70s and 80s, crashing out is what you did after you've been out drinking all night. Or when you had a hangover, you're going to go crash out or whatever. Yeah, I'm crashing out. You smoke too much pot. Oh, he's crashed out. Yeah. BM&U got destroyed. I haven't seen that yet. Wow, yeah, double long. We're gonna a lot of the double long funds will get delisted, just like a lot of the double short funds get delisted in bull runs. But if you know, I think we probably have a pretty bad first quarter and what's the worst part about it is because stocks have been holding up so well. You know, at some point we do have a risk off event because Bitcoin's already gone risk off. It's going to be. I mean, you know, I'm just not real positive on this. I think the high's in for the quarter. Well, January 26th. Yeah, that's my prediction. I think the high's in. The high's in for the first half of the year. This is just my prediction. I mean, I could be wrong. Yeah. All right, guys. Well, we get out here and go clean the house. I usually clean it on Fridays or sometimes Thursdays, but I missed last week because I was busy, so I gotta get out here and go do some stuff. Hope you guys like that option video. I haven't checked to see if I got any comments yet. Let's see. Save. Let's see if I got any comments here. It was not a very good video, but anyway, I appreciate that. Rickers, yeah, absolutely. The Rickers. Somehow though, that's just not catch. We'll think something better, and also we can always rearrange what it's called. I mean, I'm working on the branding. The branding needs work. Anyway, I appreciate the suggestion though. Well, I mean, so is RSP? Well, no, it's long the market, but it's long. What it does is it takes the S&P 500. It's long the equal weight S&P 500. So depending on the market conditions, there's sometimes the equal weight market, the equal weight S&P might drop further than the cap weighted S&P. Maybe that did in April. I didn't even look. The theory is though, in the theory of why you use equal weight funds is that after a 4 or 5 year bull run, you get too concentrated in the few stocks, and when you're investing in indexes, you aren't really in an index. You're basically in the max 7 because it's like 30% of the index. So people use that, but there's no guarantees. In fact, it's like anything else. In a bull market, you'd rather be concentrated. In a bear market, I bet you'd rather have this. So no. So I just answered my question. I bet you that this is bad for bull market pullbacks. I'm just thinking. But I bet it's really good for a bear market pullback. So, but it's not a hedge fund. If you want a hedge fund, get a buffer. It doesn't have a buffer on it. It just should be a little bit better than some of the. It should be fractionally better than something like that's cap weighted. So let's just let's just do this. Let's just look at the all right, the direction has one too. Triple QE. Okay, that's what I'm trying. Let's just look at directions. Triple QE equal weighted. So every stock's 1% instead of Nvidia being 9%, Apple being 7%, Facebook being, or whatever the current lineup is, right? But so let's just go back. Let's put on some. Let's see how far back this thing goes, and let's see where it does better and where it does worse. All right, and now there we go. It goes all the way back to 2012. Okay, so now we're going to do a little comparison, and we're going to compare it to the old Qs. We could also compare it to the triple Qs. Same price scale. We'll just do to the Qs for now, and we'll do it like this. Okay. let's look at COVID. During COVID, I mean, it's kind of hard to tell them. But I mean, the Qs went from being up 281% to being up 170. The Qs dropped like 35% because I remember. So we just have to figure out what this one drops. So let me do this regular. 58 to 38. That's 20 points on 58. That's about 30%. It's about the same. You know, let's check 2022's pullback. It dropped from 82 to 58. 24 points on 82 is 1/3, about 33%, about what the market was down. I mean, I think the NASDAQ was down 35% at the worst. Let's look at April. So yeah, so far in theory it's supposed to work, but I mean, yeah, you're right, Mayor. It hasn't been working. It appears like you may be right. So in April it went from 97 to 80. That drops 17 points on it, about 16%, 17%. Which is about what the market was down. But in theory, I guess if we ever have rotation out of tech and it goes into something else, the Qs will get killed. And the equal weight Qs in theory ought to hold up better. I mean, people are running from the MAG 10. Yep, absolutely. CAIE. What about CAIE? Oh, it might be better for downside. Yeah. Oh, well, we can put CAIE in. Let's do this. Let's just add this one in a same price scale. All right, and let's get them started on the same date. And right there. Yeah. CAIE is a good look right there. I mean, and the other thing, the problem with the equal weight is in a bull market, they're costing you money because we're still in a bull market. If you go from June till now, I mean, you'd still call it a bull market because the Qs are up 5.5% or whatever. You're still trending. It's an uptrending market, but yeah, that's where you really cost your money because the equal weight, that means you are not betting extra on the leaders. The betting extra on the leaders works until it doesn't, right? The concentration works till it doesn't. Yeah, but the equal weight may do a little better than the normal weight, but it doesn't look like it's any great shape. It's probably better to go with a buffer fund or something. You should have bought some today. Let's see. Your metals were up more than 5%. That's great. That's great. Yeah, look at Max today. Okay. I don't doubt any of you guys, but yeah, let's just pull it up. I mean, AMD got killed, right? That's after the market. This thing will probably up and down even further. You know, so yeah. But we've seen worse looks even recently, so it can get a lot worse. You know, it can get a lot worse. SBAR is more stable than Calamos on NAV. Do you have some SBAR? I think either of those could work, but SBAR is a barrier fund. Barrier funds, buffer funds, auto callables with built-in barriers, all similar concepts. I'm glad I'm glad the market's found that for us. Triple Q is only better earners. Yeah, you're right. You're right. Good call. Good call, RJ. Seems like your barrier fund XXV isn't as popular. You were the first one to mention that XX, or once you came in here one night and started talking about that. And then there's one called XV also, but I get mixed up which one does which. Anyway, the CAIE chart, I agree with that. It does look better than SBAR's. I agree with that. Mayor's just saying SBAR has steadier price action. You can have one that's up a little bit further, and another. I mean, I knew what Mayor was saying. That's why I just kind of agreed with it. In fact, I have on the max factor, I have the same metric, but I think Mayor may have eyeballed it. But I look at the standard deviation for the past 90 days, the daily standard deviation, and that tells you how wild the daily swings are. And that from there you can extrapolate that into a volatility, into a VIX type ranking to make it where it's the same scale as VIX. Where if something has a volatility of 12 or 15, it's about like the market on an average day, right? So yeah, but I can chart those. Yeah, I will absolutely chart those. I will absolutely chart those. Well, we chart those all the time. I've seen the chart, and I know that S bar looks better, or CIE looks better than S bar because I pulled up all the time. You know, but I think, and I haven't, but I bet you if we looked in the max factor and we pulled the volatilities from it, what Mayer says is, I know what Mayer's saying. I'm agreeing with them. Yes, S bar is more steady. The price that, the price doesn't swing in as big of, it's been, CAIE's been working it into their favor lately. But yeah, you could, if you wanted to say something positive about S bar, you would say it's more steady, and it probably, it may have even protected capital a little better here. I don't know. It looks like it's about the same, but it's more steady. I've always said before that a fund can be steady, but steadiness can have a cost. A fund can be too steady. You could be so steady you don't make any money. If you want something really steady, just go buy some bonds. You know what I mean? All right, so let's chart these out. Let's look at all CAIE. We'll look at all the buffer funds here, these types of funds. We'll look at the auto-callable, and so that's the gray line right there. All right, so the red line is going to be, let's look at S bar for the red line. All right, there we have S bar for the red line. Now let's get a little XXV action in there, and maybe even a little XXV, and then maybe even a little XV. All right, so where's XV? I don't see XV. I don't think it put it. I need to add a new one. New price or same price. What am I missing? There's a green one, right? Where's the green one? Is it so new? Did it just 1, 2, 3? Oh, sometimes I just have to go on. Okay. Wow, that's a good look for XV. There's XV and XXV, but that's at a different start. To compare these with each other, it's probably too short to be significant, but you could do it right like that. And they're very close. So the blue is XV and the yellow is XXV. Now let's turn S bar back on. Now there's S bar over this time frame, beating both of those 90% of the time. But yeah, it looks like it got passed today by XV. But anyway, it's been beating them most of the time. Let me get this lined up again. All right, there you have it. All right. What else should we put on there? I could also put like SPY H and Triple QH and stuff, but they haven't been around that long. I think any of those will work. If you're interested in these types of funds, what I would recommend is going to Innovator's website. If you're in these are called defined outcome or buffer innovator ETFs, I think. Just Google that. And then, of course, Calamos. Go to their website, and they have just jillions of options for buffers, barriers, defined outcome. There's so much stuff. I love talking about this stuff. If you want me to help you find something, hit me up. I like to go look for stuff like that. Looks like we're all on the same page. Looks like we got everything going the right direction. AC2 from Innovator looks good. Well, oh yeah, AC2, yeah. Yeah. It's their auto call. That's right. I hear you guys talk about this. That does look good. Let's go back to here. We can just do this. AC2, same. scale. Well, we got two reds on here, but okay, well, AC2 just started right here. Let's on the 17th. This is going to be not statistically significant at all. Right there, it looks like they're all at the same spot at the same point on the 17th. Okay, that's an equal start. All right, no false start there. So this one is AC2. Is this red one, but the top red one is S bar. Yellow is XXV, and the blue is S. We're CAIE. I wanted CAIE. Okay, gosh, I want to, anyway, CAIE. All right, now let's find a date where all of these start together and see who the final winner is. Okay, 17th is the most, right there. All right, so did CAIE get on there? Yeah, I mean, oh, it's this one right here. So I'll turn it off again. So CAIE, just over this short time frame, it's been second, it's been fourth, it's been third, and it's 1, 2, 3, fourth right now. But I mean, we're literally talking like since December, or I guess that's not too bad. December 17th. It's been around for a while. I've been around for a month and a half. Probably not significant. Pacer uses a 200-day is 100%. Yeah, stock at 50-50. I like that. What's the symbol on that? And I will. Oh, I did that. Oh, CAIQ. Okay, I will add CAIQ. Give me the symbol on that pacer. All right, so see, now I have too many of them, but they're all starting here at the same spot, right? No, that gave that one a head start. There we go. All right. I mean, so let's just start turning some of these off. I mean, let's turn off the buffer fund. So hide XV, we're going to hide XXV, and let's hide S bar. Now, what we should be left with is the auto callables. We have AC2, CAIE, CAIQ, 1, 2, 3. Yeah. Or no, we actually have 4 up here. I guess the fourth one is this XV from here. I don't know how to turn that one off. Whatever. It's well, I don't know how to turn it off or see which one it is. Well, let's do it this way. CAIE. You have to put one of the ones you're really comparing up there. Okay, CAIE. Okay, so CAIE started on the 17th of November. Okay, so then we're comparing that with AC2, which is right there, which started before that. Anyway, then we're comparing that with CAIQ, right? Oh no, Q's the one that's ahead. Q's the purple. E is the, where's E? Well, whatever those three are, that's the place they all start together. Oh, I see. CAIE is actually first. The light blue CAIE. This is CAIQ, and this is that AC2. So, CAIQ 17% yield. That's good to know. It's good to know. You could even add the global. Yeah, you could. You could definitely do that. But I've already blocked. But I'm getting bored of this. I could absolutely do that. Oh gosh! All right, guys, I got to get out of here. I'm really hungry too. I'm hungry. I need to go get something to eat, and I really am going to clean. All right, guys. Well, hey, thank you so much. Did I ever get the pacer? Did I ever get the pacer symbol? Okay, yeah. PTLC and PTMC. Okay, I have to look at these before I go because I'll forget. Nice. Yeah, so look, That look at this. They get under the 200-day. Like I always say, nothing good happens under the 200-day. We passed under the 200-day like April 3rd. Unfortunately, it was right at pretty much the lows. So it didn't, but whatever. It kept us from dropping. So this fund dropped from 52. I mean, it did hit 47. So it's down 10%. That's nothing. Then it bounced and it was flat because when we're under the 200-day, it goes to bonds probably, or it goes to something safe. It goes to cash, whatever, doesn't matter. But anyway, then we go back to stock when it crosses back above the 200-day. And then in the meantime, it's gone from 48 to, yeah, I love that idea. I love that. It looks like it just holds the S&P, like 7% NVIDIA, 6% Apple, 5.2 Microsoft, Amazon, Alphabet, right? You guys get the idea. I like it. And what was the other one called? PTMC. Okay. Yeah, thanks for bringing those up. I've seen those before. I hadn't thought about it in a long time. There's a crypto one that does crypto and Ether. It does Bitcoin and Ether, but then it goes to bonds at some point too. We found it before. I forget what it's called. But yeah, the 200-day moving average, like I say, nothing good happens under the 200-day. Nothing good. We'll look at XLCR some other time. I'll be back later maybe. Hey, Dial Tone FM. Yeah, you guys are welcome for the stream. All right, I'm going to get out of here. You guys take it easy. Have a good day. Remember, not financial advice. Please check it. Thank you. Here with a licensed financial planner who has your best interest. They even have what they call fee-based, so you don't have to worry about them selling you something you don't need. That's not as big of a deal as it used to be because commissions are free. Back in the old day, brokers used to try to sell you stuff you maybe didn't need or didn't really need, and they get a little extra commission out. Not really as big of a deal anymore, but go get a planner. Like I say, even I have one. I've had one my whole life. So, all right, guys. Thank you so much. You guys have a wonderful day. I will talk to you later.